Good morning, YouTube. Chris M here. Wanted to bring you guys just a little article that I was looking over today. I was on CoinDesk, so that's where this article is from, and this article is going to be by Omkar Gadobal, if I got his name right here. And guys, this price resistance level may hold the key to Bitcoin's bull market. So what we're going to do, we're going to get into this today. We're going to talk about it a little bit. We're going to go through it quickly. I don't want to take too much of your guys' time, but I do think he makes a very important point here that I wanted to bring to you guys. So if you could like, subscribe, hit the notification bell, all that type of stuff. I really appreciate it, guys. It's great to be here with you. I always look forward to being here in the mornings with you and just being able to bring this stuff to you and charting and new different types of things in this cryptocurrency market. So, guys, it says this price resistance level may hold key to Bitcoin's bull market. And after looking at it, I do kind of agree with him in a way. This is a good point that he makes. It says that Bitcoin BTC may be closing on a long-term bottom is generally accepted by now. And that's what a lot of people are talking about, guys, that, yeah, we may go down to that 1,800, we may go down to that 2,000, but a lot of people who are very smart in this space are looking at that area as an accumulation area. So, you know, I don't know how much lower we will go below maybe that 3,000 area, but we have to be prepared. We have to be ready, guys. And it says here, after all, the leading cryptocurrency by market value has dropped by close to 70% over the last 13 months. The challenge now is to pick up early signs of a long-term bearish to bullish trend change, which may be possible with the help of the 10-week simple moving average. So I want you guys to write that down. The 10-week simple moving average is what he wants you to look at here. Acting as resistance, that moving average proved a tough nut to crack in the 8 weeks to November 14th, the day BTC re-entered the bear market with a big drop below $6,000. So remember, guys, we were looking at that descending triangle is what happened. We broke down out of that. We were making those lower highs. Our bottom was flat, and we just pounded through on great volume, and we fell hard. Further, BTC has charted bearish lower highs above the 10-week simple moving average in the last 13 months. Hence, acceptance above the hurdle could be considered a sign that the process of bearish to bullish trend change has begun. And guys, we've talked about that. For 13 months, we've set those lower highs. So when you see that first higher high being set, that's when you really want to put your eyes on this, guys, and then wait for that pullback to come and set that higher low, and then most likely we're going to be moving. So really want you guys to pay attention to that type of stuff and keep it in your mind. And then he says here, it is worth noting that a full confirmation of a longer-term bullish reversal would be a convincing break above the former support turned resistance of the 21-month exponential moving average, the EMA, currently at 5,400. So that's going to be monster resistance, guys, around that 5,400. But as you can see here, since about 2018 there, when the year started, we consistently have hit this 10-week simple moving average, and each time, guys, even if we broke through just barely, we came back down, broke through barely, came back down. We've just been setting those lower highs, and now you can see how close we are to it right here. So we need a break and a close above it on good volume to confirm that. Now, guys, the next thing that I wanted to show you here, because that's really important to keep your eye out on that 10-week simple moving average. So it says, as seen above, BTC repeatedly failed to cross the 10-week simple moving average on a weekly closing basis, Sundays as per UTC, before falling below $6,000 on November 14th. So since November 14th, guys, we have not tested that $6,000 area. And a lot of times when you fall so hard so fast, where we went from $6,000 to $3,000, you will at some point have a retest of that $6,000. And I'm looking around that 5,400, kind of down around in this area, guys. Right around in here, 5,800. That's going to be huge overhead resistance. So if we're able to close up above that, guys, that would definitely start, in my opinion, the new potential bull market. And it says prior to that, BTC did cross the 10-week simple moving average in the last week of both February and April, the third week of July, and in the last week of August. These bullish breakouts, however, were short-lived. BTC fell back below the 10-week simple moving average in the following 2 weeks, trapping the bulls on the wrong side of the market. So that's what we have to pay attention for in this space, guys, those fake breakouts, those false breakouts, where we break and then we come and we fall right back through. So that's why we really have to pay attention to that volume, and we have to look for that follow through, guys. It's very important. As a result, only a sustained break above the 10-week simple moving average, at least 4 weekly candles above the average, would imply bullish reversal. The outlook remains bearish as long as prices are trading below the downward sloping 10-week simple moving average of 3,919. And guys, that's what I wanted to tell you too, that these trends, they are so powerful. You really have to think of them as a river. It takes a lot for for the reversal to take place. And that's why these guys who have been selling this market short, they're just riding the trend, guys. Anytime there's a spike, they say, hey, okay, I'm going to short the heck out of this because I'm going to stay with the trend, and the trend's been down. So that's what we have to keep an eye out on, guys. And then it says, view a sustained break above the 10-week simple moving average could be considered an early sign of long-term bullish reversal, although prospects of a near-term move above that average look bleak. And then number 2, a channel breakdown on the daily chart would bolster the bearish setup and allow a test of demand around the December low of $3,122. Now, guys, maybe we go down there to that $3,122 and we set a double bottom, and there's a lot of buying, or we could potentially break through that and have that lower high again and lower low where we just continue to get pushed back down. But we also have to realize that there is benefit to that, guys. The lower that we go, the cheaper you're able to get these coins. And if you're able to hold on to these coins, you know, for the next run, it could be something life-changing, because a lot of these coins have lost 95% of their value. So that's what I want to bring to you. There is great benefits to the bear market. There's great benefits to a bull market, and you just have to capitalize on both, guys. And if you're able to play both sides of the market, all you're looking for is volatility. It doesn't matter if the price continues to fall. It doesn't matter if the price rises. As long as you're able to trade that volatility, it doesn't matter. So that's the benefit of learning how to trade, guys. And also, it was showing that today, that trading book I was telling you about, not the ones from Thrift Book, they're not here yet. It may take another day. I was looking at the tracking. But the one that I was one that I got off Amazon, I think it was like $15, but it has all in one. It's 3 books in one. It has beginner, intermediate, and advanced day trading. And I'm just going to be studying that stuff, guys, because I feel as though I want all of those tools in my toolbox. Even though I'm not a day trader, I want to be able to day trade with the best of them. I want to be able to scalp with the best of them if I want to get in, get out. I want to be one of the best long-term investors, swing traders, all that type of stuff. So I study swing trading, I study long-term investing, I study day trading, I study scalping, and I think it's all great to have all those in your toolbox, even if you're not a scalper, even if you're not a day trader. Why not have those tools, be able to get in, get out, especially with the scalper? Sometimes if you're playing a big position, you know, you can get in, make 2% and get out. That's not my game because I don't have enough money to do that, but there's a lot of guys who will, you know, they'll play a $10,000 position, they'll get in, they'll make, you know, $100, $200 on that $10,000 position in an hour, and then that's their day, you know. And the more money you have, the more you're going to be able to do those type of things. And that's why we need to continue to study. We need to build our accounts. We need to build our crypto hodls, all that type of stuff. But I'm here for you guys. I want to bring this to you. God bless each and every one of you. I hope to get a couple more videos out here, but just want to bring this to you. Take care, my friends.